Hello, everybody. This is Olu from Content Capital. Well, I have come again as to as usual, to say something, to actually discuss something that is quite different today. What I'm actually looking at today is the way I trade. I want to show you guys the way I trade, the way I trade against moving average traders. One of the well-known traders in the market is moving average traders. They tend to claim that they know how to trade by following trends. In most cases, they don't actually make profits in a long time in the markets. So today, relax. This I'm going to show something to you today. How I look at the markets. Looking at moving average as part of liquidity provider. I see them as liquidity providers. I allow them to go into the market, swimming in the market, enjoying themselves before I actually act. Okay, you know this game, you know this market, national market game, it's zero sum. Okay, if you are not that smart, you will just become what I know usually say is you are saying that you donate to the market. Moving average traders, I normally follow them, watch them very well. I see them when they act and I do otherwise. So today I'm going to show you the way how I trade against moving average traders. So let's go to the main chart and let me show you how it is. All right, let's go. Yeah, this is I'm a swing trader to be precise. Let me just introduce myself once again. I'm a trader, swing trader. I actually focus on more on 4 hours and daily time frame. For this the illustration of today, how I trade against moving average traders, I'm going to use 4 hours to illustrate that. Well, I just want to lay a point of warning. This is the way I personally look at the market. This is one of those ways, let me put it that way. Let me correct myself. Because it depends on what the market is, the opportunities presented by the market. However, this is one of those ways I look at the market. If I see there are some traders that I watch out for, if I see them acting, so that's when I will now take my action. One of them is moving average traders. I'm going to show to you what I look at when I see them doing their thing, and I would pull out my stuff to trade against their own position. I allow them to come to the market. I allow them to enjoy the market because in this market liquidity needs to be provided, and one of those traders that provide liquidities are moving average traders. So if there's no liquidity, how do you actually want to trade? If there's no buyer, how do you want to sell? If there's no seller, how do you want to buy? So in the market, there must be willing buyer and the willing seller, as we all know. So the same is applicable to this financial market, especially forex. Now, this is Euro USD time. What is this? This 4 hour time frame. Okay, we know that basically when we're talking about moving average, some are using simple moving average. Some traders using exponential moving average. Some are using weighted moving average. But most of them, you understand, most of them tend to use exponential moving average. It's just a little bit different, just a little bit adjustment in between simple and exponential moving average. And I discovered over the years that the common ones they don't tend to use are moving average 50, 100, 200. If you are a trader, especially a beginner, there's no way they wouldn't have introduced moving average 50 to you. As a matter of fact, they would have introduced to you the trading moving average by one crossing the other. So what if you have actually taken up, I don't know, probably online courses, any program, YouTube and all that, you will see some guru, self-acclaimed gurus, self-acclaimed experts saying that they use the moving average by looking at one lower moving averages, crossing the higher one. For example, 50 crossing, 100, you take action. Let me show to you. Okay, okay. Let's just this is let me try to bring up moving averages before. Let me bring it up. Just a moment. This is trading view. Okay, let's go. Okay, I have moving average exponential here. Okay, I have nine clues. This is the default one. Let me bring up another one. Making two. Just follow me. This is, let's go to settings. This is settings. I want to change. I know that the ones the most of the traders are using are 50 and 100. And those are those ones I normally actually watch out for. When I see them that they've taken action, available in the market, I will not do my own thing. So this is 50, this is 50 close, and it is exponential. Let's go to style. Let this one be blue. Okay. The second one, just basically we need two moving averages. The second one, input, let it be 100, 100, sorry, 100. Okay, style. Let me change this one to red. Okay, change it to red. Okay, okay. Now, okay, this is how most of the newbies, most of the new beginners, new traders, you know, I will show to you what they normally tell them. Well, I mean, what they've learned so far, how to trade moving averages. To me, I see them as part of the trader that provide liquidities. Okay. Now, look at this. Look at this. Look at this. This is based on our settings. This is 50. 50 is blue. Okay. Once again, red is let's go to red. Red is 100. Good. So what most traders, moving averages traders out there usually do is that they will allow this lower MA exponential moving average to cross 100, and they will open position. For example, this 50 crosses 100 at this point, and this should be their signal candle. Okay, now can you see that they are actually in the market? They provided liquidity to the market. Having open position here, they are making money. You see themselves making money. What they've just done is to provide liquidity, because we from counter capital, if you actually want to sell, you have to allow moving average traders to be in the market by actually being in the market, presenting themselves as buyers. This is it. Now, before we act, if you have not watched my previous videos, I would advise, please, because I'm going to bring my simple tool because of this what's it called? Because of this, can I call it trading ideas video, or lectures or something. I'm just trying to do the video on how I look at markets. This is one of them anyway. So I normally use one simple tool. People call it trend line. This is it. I don't call it trend line. People use it to draw channels. I don't draw channels. I don't call it, to me, it's not trend line. The name given to it by this even platform is trend line. Everybody knows it to be trend line. When I use it, the way I use it, I call it I'm drawing up a cut. Cut as in, not, let me type the way, the way what comes to my mind when I actually develop this strategy. This is what I don't mind. Court as in COURT. Okay. Court is where the judgment is delivered. So to me, in the same way, I bring it to my trading, trading approach, that I have to draw up a court in which my trading decision will be taken. That's what I'm trying to say. Let me cancel remove this. So having got said that, now I use this tool to draw up down my court. Okay, I will show you how to do it. In my previous video, I've actually shown it how to know, draw it and look at the opportunity in the market. All right. Now look at this moving average trader. At this point where the 50 crosses 100, they will buy. They are in the market already. Okay. Now look at this point again. At this point where 50 crosses 100 downward, they will open position. Okay. They are in the market already. Okay. At this point where look at where 50 crosses 100 upward, that is their strategy. That is well-known strategy in the from the what's it called, moving average traders. They would buy. Look at this point. When this crosses this, they will sell. Okay, they will sell. Let me go back and show to you. There's another way they trade, which I normally look out for. Okay, there's another way they trade. Okay, look at another way they trade is this. Look at the slope of these two moving averages. Look at it. Look at this. This is 100. This is 50. When the slopes are facing the same direction, some of them to believe that it's an opportunity there for them to to come to the market, to open positions, to trade. So can you see these slopes are facing downward, moving average traders already in the market. But I don't do it like that way. I allow them to come to the market and now see them as part of those traders that have provided liquidity in the market. I want to open a sell position. One of those set of traders I look out for are moving averages. Let them open buy position first. Let them be enjoying themselves in the market. Let them present themselves in the market first. That's what I normally one of those I normally look out for. So I'm going to show it to you today. Okay. I'm sorry if I'm moving average traders. Just like I have to, you just have to, share this with my followers. I look at you guys and I act otherwise based on okay. Now look at this. Okay. Apart from, we are still on moving average trade, the way they open positions. When it crosses 50 crosses 100, a set of moving average traders will open positions. They are in they are in the market already. Another set, listen to me carefully, will allow a retracement back to 50 in between 100 or possibly below 100 and goes back above 50, the open position. Okay, so what you will simply do is that we will allow the first set of traders, first set of moving average traders, when that look at moving average crosses in opening position to act first. In other words, at this point, moving average traders will act. The first set of them open position. Okay. The second set of them, when it retraces back to EMA 50 to 100, the second set of them will open position. So, having seen that, okay, both of them, the first set and the second set, are already in the market. We from Counter Capital will now we will now draw up our cut. This is how we draw our cut. I'm not going to go over it. If you actually want to know how to do that perfectly, watch my previous videos. I've actually, I've done justice to that. Okay, so we draw our cut by taking The first leg is my first side, let me say the first side of my cut. People call it trend line. I don't call it trend line. When I'm done with it now, people will say it's a channel. It's not a channel because if you are drawing up a channel, in most cases, channel will have four, three, four, 5 points. This is the way I put it together is quite different from drawing a channel. So let me show to you. Now, from this point, look at this is where the crosses happen. This is where the crosses. Now the structure around that crossing is this. So I start from there. Once again, I bring up this, my first side of the cord, connect it to the close of the candle here, here. Okay. Now, this is the first set of traders. This is second set of traders. This is where the retracement is coming from. So I will copy or clone this. Okay. I will take it to the closed candle of the opposite candle. This is the close of it. Touch it. Okay. Now, this is sorry, this is this and in between this and this is my cut. This is where we want to deliver judgment for moving average traders. This is what we look out for. Okay. If I'm extending, peradventure I need to extend this the other side, the first side of my cord. Okay. I'm looking at these 2 points in extending it, not looking at anything more. That's what I said. It's not a channel. Okay. Now, so let's move the market a little bit forward just to show to you. Let's show to you. Okay. Okay, right. Now, this is where the market is right now. At this point, I want to move this one. I'm looking at this point. Okay. Okay. Hold on just a moment. I don't want to leave. Okay. Yeah. Okay. Okay, just a moment. Now, I'm looking at this point. This is what I'm looking at. Now, the other side of my cut is where the retracement is coming from. Now, two ways in opening positions. If I've allowed the first set of non average traders to enter the market enjoying themselves, the second set of non average traders have entered to is enjoying themselves, they are available in the market. But we from counter capital traders, we want to sell this market. There's another thing we look at fundamentals. Okay, so we want to sell this market. So what we're going to do is that when it's market, we go back a little bit to so you can enjoy it. Okay, actually, we've taken this, we've taken this, we've taken this. Market is here. What we are looking for around this side, we are looking for full close candle. Understand? Bearish full close candle or a golfing candle that would close into the cut. Okay, so let's go. Let's look at it together right now. Okay, now this candles qualifies for us to act. Okay, so we are opening sell position here. Okay, listen very well. Our stop loss will be behind. There's a way we calculate stop loss, but that one is beyond the scope of this class. To be sincere with ourselves, because there's some people that actually have joined us cannot be disclosing everything to the public like this. That doesn't mean that the public cannot enjoy what the inner circle are enjoying. Okay, now this stop loss will be behind, this take profit of this opportunity will be here. Can you say this is where they started from? The first set of traders, the second set of traders. So move the market to see the action. Now, in taking profits, in taking profits, if the market it gets here before the crossing of the crossing of moving averages downward, and it gives us the another opportunity of bringing up our cuts. You understand? We'll leave this, we'll close the existing trade, even though it has not reached take profit. Even if it is in loss or it's in profit, we close it. But as long as moving averages has not, they have crossed, but they have not given us opportunity to bring up another cut of ours, we'll still leave the trade running. But if it has given an opportunity to do that, we'll follow the new cut and close the former. Okay, let's go. Right now, we'll be in profit, we'll be in profit, be in profit. So we're adjusting, we're adjusting our cuts based on the current market price. What are we just looking at is this point and the one, two, three. That's what we're looking at. That's what I said. It's not a channel. We call it a cut. Where we make decisions. Okay, market is moving. Now we are in drawdown right now. Okay, we adjust to the current market price. Moving average traders are feeling cool in the market. They are making, they are seeing the account in blue, in positive. Okay, so we are still in the market. Our SL has not been hit. We are still in the market. This is what we are looking at for the adjustment. Okay, move the market. The markets, another set of traders for moving average is going to act at this point because this is touches exponential moving at 50 and it's given signal. They will sell. They are providing liquidity for us. Okay, okay. So we are back in profit, profit, and profit right now, and profit right now, profit right now. Still in profit. They not won't close the market, we won't close any trade right now. We can afford to adjust our cuts. We adjust our cuts. Okay, okay. Still in profit. Okay. If you look at the moving averages here, around traders, some believes that when the market is below moving average, you trace it back to it, okay, that they will act. Some actually join the trend here, okay. Some of them will have actually sold, but we are still in the market. This is what we are looking at. We are looking at the crosses. Not that first of all, crossing has not happened. Crossing has not happened, and our court has not been able to be like we have not been able to establish our court. So let's move. Okay, we are still in the market. We're in the market. Good. Right now, this is cross has happened here. Now the question now is, if you look at this market where it is now, can we actually bring up our court? Can we drop our court? No. The answer is no right now at this point. So we still leave our trade running. Move. Okay. Don't forget, this is where the crossing happened. ME50, EME50 rather crosses EME 100. Okay. At this point, this is where the structure start from. Okay. So we move. We are still in the market. We actually lost part of our profit here. Now, at this point, what moving average traders will be looking at is that this as 15 has crossed the 100. Okay, for the fact that that has happened around here, a particular set of traders for that uses that moving average traders will have opened sell position. Don't forget, wait till at this point as a counter capital traders, we are still in sell position. We have not closed. We close when we are able to bring up our courts. When we look at the market and our court can be established, we leave the market immediately. But at this point, we have not been able to. We can't still do anything because this is the this is the first. This is where the crosses happened. This is the structure behind it. This is where the less comes in. You know, there's a downward trend. This is a retracement. Now, before we can actually bring up our courts, successfully without any hindrance, this retracement must move beyond this point, this starting point. That's when we can actually bring up our court. If you observe, okay, if now look at moving average traders. They are going to act. Most of them will be available in the markets now. They will provide liquidities for us, for us to make use of. Okay, we are still in the market. Okay, we are in the market with them at, at this point. We are in the market still with them at this point. Good. Right now, we need to leave the market. Why? Crossing has happened, retracement has happened. We should be able to bring up our court successfully because the movement is beyond this retracement point. So in doing that, to be able to, if you are able to bring up our court, we are leaving markets immediately because we can see that the first set of traders for moving averages are available. They provided liquidity, so we need to leave. Right, regardless of our position, whether it be in profit or otherwise or break even. As you speak right now, we are in profit, but you have to close it. Okay, so in doing that, we have to close our trade. This one has to go. This has to go. So this is where we are right now. So let's bring up our cut from this point to the close of the candle. Okay, and clone it. Take it from the retracement point from the close candle here. So we leave the cut. We leave we close our position because moving averages are providing liquidity. So let's continue with the market flows. Okay, we're in the market, looking at the market right now. Oh, this is where this point was our previous day profit, and we actually closed around here. So we don't need this any longer. Remove it. Okay, so we adjust our cut based on the current price action. Adjust our cut based on the current action. So we move the market moves. Now at this point, as I said earlier, there are two ways that you open positions. It's either the market moves beyond this hour second cut, the second side, the other side of the cut, and comes in with engulfing on fully closed candle, or it breaks out of the the first side of the cut, which is this. Okay, as we are looking at the market right now, look at this is it has broken out, closed above it. We are going to act. We are going to open buy position. If you look at this market right now, okay, if you look at this market right now, the moving average moving average traders are actually in the market already with their sell position. So we have entered. Our stop loss will be behind here. Okay, just a moment. Okay, so our stop loss, there's a way we calculate our stop loss. Okay, it's going to be our, our stop loss is going to be behind here. Okay, okay. Our take profits will be here. All things being equal. If markets does not present anything contrary, even moving average traders have have not acted. Otherwise, we will leave the market like this and watch. Okay, we have entered here by moving average traders are still in the market. They present an opportunity, they provided liquidity for us to be able to buy because they're already in the market with the sell position. So what we're going to do now to see what market will do. Wow, wow, wow. This is funny. Our take profits it immediately. So you can see now that this moving average traders actually provided liquidity for us to act. So I mean the set of traders have entered here, entered here, they've left the push them out of the market. Market has pushed them away. They are just liquidity providers. So like so many others too. Okay, so for us, this transaction has been completed. We are done. Okay, we are done with this. Take our profits. Nice trade. Hope to see more of you. Moving average traders. Okay, this is our take profit. To remove it. Market is the way it is right now. This is where the market is right now. We are watching moving average traders again. Keep watching. Now, if you actually want to do it, you have to probably maintain. You shouldn't go below 1 hour. If you actually want to maintain, I normally switch in between daily and minimum 4 hours, 4 hour time frame. But if you are intraday traders that actually want to enjoy this to focus on 1 hour, don't go beyond that. Don't be switching because if you are not grounded, you don't, if you are not, how will I put it now? If you are not used to the strategy, if you are not grounded in strategy, don't be switching time frames. You have to maintain one. If it's 4 hour, maintain 4 hours. If it's 1 hour, maintain 1 hour. Okay, because by the time markets want to deal with 1 hour time frame moving average traders, markets will deal with them, follow the markets. If you actually want to deal when we want to deal with 4 hours, okay, moving average traders, it's real. So we follow the markets. If you actually want to deal with daily time frame, likewise weekly, regardless of your time frame, but don't go below 1 hour. So this is where the market is right as at this moment. Let's market moves and see what a moving average traders will do. Okay, they're out of the market. Okay, they believe that it's part of the game. That's what they are being told. And it's part of the game. Loss is part of the game. Yes, it is. But you have to be smart. Now, they've come again. 50 crosses 100. Okay, 50 crosses. Some actually from here. I don't consider these ones. Immediately, it goes above the two moving averages. It traces, some will act fine. Provide liquidity. Let's enjoy ourselves. So they're in the market again. They are in the market. Moving average traders are in the market. Wow, they are so happy. They are trend following traders. Wow, they're enjoying themselves. Look at, uh, some will even tell you if there's a space between the two moving averages, be it 9 versus 15, 14 versus 25. The common ones is 50, 100, 200. So let's watch them. We are watching them, watching them. They are just their liquidity provider. Because if you actually want to sell, if you want to sell, there must be buyers in the market. If you want to buy, there must be seller in the market. So, and at the same time, our core strategy, followed one principle: buy low, sell high. Buy low, sell high. Okay. Now, okay, this is the first set of them has come into the market here because market crosses here. Okay, I'm sure by the time they see this candle, they're already in profit. They believe that they can take money to the bank. No, they can't yet. We are watching. Now, the retracement that is happening right now is racing from this point to 50 to 100. So before we can actually bring up, drop our court, we have to allow the second set of traders to come in such a way that it will take out this high. So before we can do anything, let's watch them. Let's watch them do their thing. Okay, market is moving, market is presenting to them. We are watching, we are not doing anything. Just we are just be observing the markets, looking at even I mean the moving average traders have actually entered here. Yeah, the person is already it's close to being in drawdown already because you have to use this candle as your signal point. Anyway, that does not concern us. We are just watching them. Okay, watching them. What we actually want to see is that with this way the market is right now, we see another set of moving average traders. They are being told, they actually, they told them they've learned from anywhere that if the slope, these two slopes, can you see the slope is facing upward, they should act. They provide liquidity, they will act. Thank you. We appreciate you guys. Okay, appreciate you guys. We are watching you. We are watching you. We are looking at you. Watch your back, moving average traders. Yeah, we are at counter capital. Just looking at you because if you don't provide liquidity, we are not going to act. Oof. We are not doing anything because we expect the second set of traders that have actually joined here to take this one out. But they are not doing that. We are not going to do anything. Well, sorry about that. They are in loss right now. They are in drawdown. I'm sure the first set have actually entered here. Be counting their losses right now. Like what is going on? Okay, let's see. All right. Whoa. Now, so for us, there's no opportunity in bringing up our costs to this price action. So there's no opportunity. Why? We've left this side. There's a crossing happening here. This is 50. This is 100. Okay, 50 has crossed on 100. We are watching. We are watching them again. Watching them again. Let's watch carefully what they are going to do. For some that is looking at it as this is a prevailing current structure, the moving average trader that are looking at crossing will have acted. based on this signal. Probably a stop loss is behind, probably it's here or here. You don't care. You're just watching them. Okay, okay, all right. They are still playing around. Probably it's this consolidation phase of it. They are still playing around, it's still within the same, price action area. Taking it here and here. So we're watching them. There's nothing we will do. There's no opportunity yet. Okay, it's an opportunity. Yeah, they are smiling. Which traders are smiling right now. They are happy. Oh, they are okay. They are happy. We cannot do anything. We love them being present in the market. It's a very good availability of them. You understand? They provided the liquidity. They are in the market already. So for this crossing, we are looking at vulnerable traders. We want to we actually want to buy from them. But before we do that, our court must be established. We should be able to establish our court. We should be able to bring our court to the current market structure. So before we can do, let's see what the market is doing. Like our traders. Is there going to be a retracement? Let's see. Let's see. It's going to be a retracement. See retracement back to 50 into the 100. Wow. Enjoying. Wow. Making money. Their account is in positive. Blues is showing everywhere for moving average traders. Okay, another set will do something here. This is another another entries. Don't let me go there. Don't let me disclose that. Anyway, they will act again. It's another setup. So this is the first setup around this side. Here. This first set of moving average traders in the markets enjoying themselves. Retracement. These people will have a little bit of not go down. Their profit will have reduced a little. Another set, for it to touch moving average 50. Okay, to act. This is a very good, enticing candle. This is very good enticing candle for them to act. Okay. Now, for us to now bring up our courts, this market must move beyond this retracement leg, which is this. If it doesn't, if market goes back up, we are not doing anything. Okay, we are not doing anything. We are not doing anything. Yes, as right now, yes, we can bring our courts to their doorsteps. We can bring our courts to the arena. So, to do justice to them, you can call these two trend line. I don't know. It's not trend line for me. Okay. Close of the candle. Close. Where is the retracement leg? This is retracement leg. Retracement leg. Retracement. Reasonable retracement leg. Close. First leg present in the markets. The first moving average traders here. The second here. So move the market. Let's see. We'll not be able to act here because what we actually want markets to do is probably touch this. Okay, let's continue, please. I have a little bit of distraction there. Okay, now this is where the market is right now. We will not be able to do anything here, here, because it didn't touch the other side of the cut. We expect it to touch, go beyond it, and give us a golden candle or full close candle into it. But we are not seeing that opportunity. We don't have that opportunity, so we don't want to just be watching. Look at the other side. Okay, can we adjust this our course? Okay, adjusted market. So let's adjust our course. Let's adjust our course. Okay, at this point, if you observe very well, another set of trader will act. First, this is second set of moving averages. But if you observe, this is EMA 50, and at the same time, this first side of our chords, which people to them it will look like a trend line. First touch, second touch, third touch. Another set of traders, they call themselves trend line traders, will act here. They will give them that enticing candle. I call it entry cheese. They will act for at this point. Okay, want to see? Come and see. Yeah, they will act. Another set of traders come into the market, providing very good liquidity. Okay, yeah. We are adjusting our cut. Don't forget, don't lose focus. This is our cut. Here we adjust it. This we are looking at when we are adjusting. Close of the candle. Okay, we are adjusting it. Another set of traders have come in here. They have, can you see? They are feeling cool, making money. Okay, these ones that are here, this one's making a lot of money, a little bit of drawdown in profits, and they are seeing this structure too. They are feeling cool that market is still going to okay continue the downward trend. Okay, let's move the market. Let's move the market. Whoosh. Okay. Before then, I want us to adjust. Okay, just follow me. This candle, this last candle we are seeing here, this candle, this particular one, this one, this is our signal candle because it has broken above our first side of the cut, which is this. That's why I don't call this my this our sorry about that. I don't call it trend line. I don't call it channels. Okay, channels will give you so many legs. Trend lines will be looking at 2, 3 points. This is not channel, please. This is not trend line, please. Okay, we act here, we allow our SL, which is stop loss, behind. There's a way we do that. If you actually want to know more, you can subscribe to this channel to learn more nearest future, or you join our WhatsApp group so you can take it up from there. Okay. So there's a way we calculate our what we are doing now just for educational purposes anyway. Do you understand? Don't expect everything will be given to you on the platter. No, it doesn't work that way. I've actually tried up to this point disclosing my strategy to the public. Okay. I'm saying that the sorry, I don't just okay. I don't just want to leave this market the way the market is right now. The bottom line is the stop loss will be behind. It's a way. Follow me. Move the market. We are in profit right now. Two sets of traders are counting their losses. Moving average traders which they've started execution from here. And this third set of traders, they are trend line traders. They've joined them at this point. They've actually provided more liquidities for us to act on. Now, our take profit, don't let us forget that. Our take profits will be here. These are our take profits. These are our take profits. Now, let's move the market. 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 We are in profit. Moon average trader is still at this point. They are hopeful. They're still hopeful that the market can still come back for the fact that it has moved below the two moving averages. This is 50, even though it has not crossed, there's still hope. Even if it does not, if there's a SL here, there's still hope. Market can still go down. If somebody want to polish, others put their supports here, they will still be hopeful. Let's continue. Let's continue. Now we are in drawdown, sort of, because this is our signal candle. As a form position, we are in drawdown, we are in drawdown, we are in drawdown. Okay, we are in profit right now. Okay, we are in profit right now. We are in profit, still in profit. Back to drawdown. Okay, drawdown. Well, at the same time, as this market, this price action progresses, we are watching moving average traders. We are watching moving average traders. We are watching moving average traders. Okay, we are in profit right now. We are watching as we are in profit, getting closer to our take profit. We are watching moving average traders. Don't forget, don't lose that focus. You have to be watching them. Look at, yeah, the 50 crosses 100. Moving average traders will act. But we are still in the market. But the fact that we don't be able to bring up the counter, you know, cuts as against the existing one. Okay, so against the existing one. So we are still in this trade. We won't close yet. Sorry, but I might have a little bit of distractions because I'm actually doing it from home. There are so many distractions. I'm just trying to actually put myself together. As you speak, there's so many distractions, kids and all that. But I just have to, I don't just want to disrupt this video. It's not that I believe this we are actually doing this every time. Anyway, we are still trade. Okay, still there. Okay, still trade. Look at moving average traders. We are watching. There will be the first set of them has entered. We are still, don't lose focus. We are still in this trade. First of them has entered. We are still in trade because we've not been able to put together our calls. So we still be in this trade. Daily we're able to put together our calls, we leave, irrespective, regardless of what our person is saying. We will be in profit otherwise we leave. Because we are watching moving average traders carefully, carefully, carefully. So take profit it. Can you see? Tap into take profit and come back. So take profit it, Congratulations to counter capital traders. We'll remove our calls. This is where the market is. I hope this video will not be too long. Let me just finish it up. Let me just finish it up. Finish it up. I can't just appear. Let me just finish it up for for security, for criminal purposes. Let me finish it up. Okay. Now, so we move from this is where the market is right now. Okay. We'll keep watching them. The first set of them, the first set of them is already in the market because 50 has crossed 100. So small the markets, markets move. Taking our profit, you're just watching moving average traders. Exponential moving average traders. They are in the market. Oh, look at tap into 50 EMA. Some will take action. You are not doing anything. Just be watching. Present, give us liquidity. Some, hmm, some will take action from here. They will put their stop loss here. Some will put their stop loss here. No problem. Okay. We have retracement. So now at this point, retracement has happened back to 50 and 100. For us to be able to bring out our calls, this movement must move beyond this point. If it doesn't, they are not doing anything. Market moves, market moves. Okay, the trade is moving, the trade is moving. Sorry about that. I know there's been there's so many distractions around. Please just bear with me. I'm just trying to force myself to do this. To do this, you understand? Families are around, movement will be going around there. Just follow, just follow my, just follow me, please. Just feel like sharing this as as a way of helping struggling traders. Okay. Market is moving now. Everybody is comfortable here. So well, slope moving average traders. They will act if the slope of these two MAs are facing the same direction. Probably it's facing enough. They will act. We are just watching. We are not doing anything here. Fine. Retracement has happened, but we are not doing anything. So that's the fact that the market movement has not moved beyond this point where we can actually bring up our cut. So just be watching. We are watching the market. We are watching the market. You can actually do this with like you watching like 3, 4 pairs, max 4 pairs, different correlated pairs. Don't be watching USD at the same time you are looking at GBP USD. You're still looking at the same thing. Don't be watching what's it called now, gold, and at the same time looking at silver. You are still looking at the same thing. Just select 4 different pairs, and you have to one more thing which I must confess of. You have to be good at fundamentals, microeconomics. You have to be good at that too. Okay, you have not actually delved into that on this channel. We're still going to do that very soon. So, if even looking at this, looking at it, watching this moving average traders, if the fundamental is actually saying, as we are going right now, as I'm saying sell, but it's going to, market is going to, we sell high, buy low. So you have to allow them to provide liquidity in which we can actually come in fully. And doing that without actually setting take profit. But this is beyond this class anyway. Let's move. Let's move. We are watching. We're not doing anything. If any counter crosses, we forget about it. We're not doing anything. Market is moving. There's nothing for us to do. We're not doing no crosses, nothing. Now watching even average traders carefully. Nothing, nothing. We're not doing. Just be watching. Just we keep our finger crossed. Finger crossed. Finger crossed. Still looking at them, watching them carefully. Yeah, carefully. Now, this part of our structure, there's nothing to do. We are not doing from here to here, there's nothing for us to do. Nothing. Nothing, absolutely nothing. On this looking at 4 hour time frame, there's nothing. So 15 has crossed 100, watching them carefully, watching moving average traders carefully. Okay, we are waiting for retracement back to 50 and 100. We are waiting for retracement. So, oh, oh, whoa, this is where the market. That's very good. So there's nothing for us to do here. All right, there's nothing for us to do. We're just watching that. So this is the current price action, Euro USD. So what we're actually trying to do is get a retracement, move back this, bring our cuts, and take them out. Let's see. I want to do something funny right now. I don't go beyond 4. I've said it. Okay, before I actually, end this video. At this point, we will appreciate if you can subscribe to this channel, for more updates. If any other video is released, so you'll be the first to be notified. Okay, I want to do something before you actually stop this video. I want to go to 1 hour and see for 1 hour trader using this strategy. I don't go beyond 4 hours, but I just want to do something whether it will actually, work for intraday traders. This is crossing, excellent. Oh god, so funny, 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 so funny. It happened here too. It happened that you will not be able to act. This crosses, okay? If this crosses, we are watching the. If this crosses, if this crosses has not happened, if this has not happened again, this crosses has not happened. Let's assume, just let's close our eyes that has not happened. We'll be able to bring up our cut using 1 hour. If this cross has not happened, please, at this point, you'll not be able to, you won't do anything. What I'm doing right now, just for cleaner purposes, okay? Which where the retracement is coming from. If this has not happened, as a counter capital trader, you act here. Your profits, TP will be here. Stop loss behind. If this has not happened, but if this has happened, you won't do anything. You won't do anything. Just you're watching that because you have to follow your approach, your strategy strictly. Okay. I didn't even see this. I was actually watching 4 hours. By now, I'm supposed to have stopped the video. I just want to see if the opportunity for one time trading traders, 1 hour traders. Okay. Now look at this. This another crosses here. We are watching. Before you can do anything, you have to allow it. Okay. The treatment has happened. They're enjoying themselves. First set of vulnerable traders have entered. Second set. Before you have to allow before you can bring up your courts, it has to be above this. Does that happen? This one, if that's not happened, though, forget. This take profit is not real because if I'm using one, if I'm actually looking at 1 hour, I wouldn't have actually taken anything. I just left it. And that's why I say this has not happened at all. The take profit would have been hit, but you won't be able to do anything. Then let's be real. Now this crisis has happened again here. Looking at 1 hour, looking at this crosses, this structure behind it. Okay, let's move the market. Let's move the market. They are presented themselves in the market. Okay, let's actually look for a very good retracement point to 50, 50, 50 to 100. Okay, and move that beyond that point. Okay, before we bring out our chords. Let me remove this. This is for 1 hour time frame traders. Okay, crosses here, structure from here. No average traders looking at 1 hour, they are already in the market, swimming, enjoying. So, to bring up your cards from here, close of the candle. Okay, you have the trade flows. Okay, okay. This for 1 hour time frame traders anyway. Adjust, mm, adjust it, adjust. This for 1 hour time frame traders. That is watching what moving average traders are doing. Okay, we need full close candle above this first side of the cut. Close candle. This one will not serve. Okay, this is it. This is it. This candle. This candle will take us in. So we buy our stop loss will be around there. Take profit for this exercise. Just for general purposes. We are looking at this point. Sorry. Yes. Okay. So yes, 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 yes. Hmm. It's a lost trade relatively. Well, if I can't just if it can actually eat our SL, this is stop loss. They don't just this is a lost trade. This is a lost trade. But you get the drift, get the flow. This is a lost trade for 1 hour. But if let's assume that the there's a way we calculate our stop loss. Can we really just place it anywhere? Let's assume that just a little bit behind, it can still be in the market. If it's not, take your loss and look for another opportunity. This is where the market is right now. The market is right now for 1 hour. Okay, you don't be expecting to be winning all the trades anyhow. It doesn't work that way. It's 1 hour. Thank you very much. Okay, we are allowed to draw the curtain. Okay, I would agree. I would just implore that you join this, subscribe to the channel, for subsequent videos. We are here to add value, not just to bring up, a video for doing so on YouTube. No, we are here to add value, real value. Okay. Just well, I'm not saying that you just go to the market right now and start using it. I'm just presenting for general purposes. You what I have in mind before now was that whatever trade I open, I will use the channel as as a way of journaling my trades. But over time, I discovered that people asking questions, asking for me, what I need to know, that I need to throw more lights. That's what I was really doing with. Thank you very much. See you later. God bless. Bye.